Hello everyone and welcome back to our stock market learning channel. I hope you are doing well. Before we begin today's lesson, here is a quick disclaimer. This video is created purely for educational purposes. I am not a SEBI registered investment advisor, research analyst or portfolio manager. The information shared in this video should not be considered investment advice or a recommendation to buy or sell any financial security. Stock market investments are subject to market risks. Please do your own research and consult a SEBI registered financial advisor before making any investment decision. Now let's begin today's topic, primary versus secondary market. In our previous class, we learned about the financial market and their different types. Today, we are going to understand two of the most important concepts in the stock market, that is primary market and secondary market. If you are a beginner, these two terms may sound confusing, but don't worry. By the end of this video, you will clearly understand what they mean, how they work, and why both are essential for functioning of the stock market. Let's start with a simple real life example. Imagine you want to buy a brand new Honda bike. You visit an authorized Honda showroom, you pay the money, and the bike is delivered to you for the very first time. In this transaction, your money ultimately goes to Honda company through its dealer. You become first owner of the bike. This is exactly how the primary market works. Now imagine that after 2 years, you decide to sell the same bike to your friend. Your friend pays the money directly to you. Honda is not involved in this transaction and does not receive any money. This is exactly how the secondary market works. This simple example explains the basic difference between these two markets. Now let's understand each one in detail. What is the primary market? The primary market is the market where a company issues and sells its shares to the public for the first time. These are newly created shares and investors buy them directly from the company. The most common way this happens is through an initial public offering, that means IPO. Example, suppose ABC Limited wants to expand its business by opening new factories across India. For this expansion, the company needs 1000 crore. Instead of borrowing the entire amount from a bank and paying heavy interest, the company decides to raise money from the public. It launches an IPO. Thousands of investors apply for the IPO. If shares are allotted to you, you receive them directly from the company. The money you invest goes directly into the company's account. The company then uses these funds for expansion, research, new projects, or reducing debt. Remember this simple formula. Primary market is equals to company investor. Money flows from investors to the company. The company receives the fund. Next, what is secondary market? Once the IPO process is completed, the company's shares are listed on a stock exchange such as the National Stock Exchange or Bombay Stock Exchange. From this point onwards, investors can freely buy and sell those shares during market hours. This is known as the secondary market. Here, the company is not directly involved. Transactions take place only between investors. Example, suppose you purchase shares of Reliance Industry 1 year ago. Today, I want to buy those shares. I pay the agreed amount to you. You transfer the shares to my demat account. Reliance Industry does not receive any money from this transaction because the company has already raised its capital during the primary market stage. Remember this simple formula. Secondary market equals investor to investor. Money flows from the buyer to seller. The company does not receive any money. Primary market versus secondary market key differences. Primary market versus secondary market. In primary market, shares are issued to the public for the first time. In secondary market, existing shares are traded among investors. In primary market, investors buy shares directly from the company. In secondary market, investors buy share from other investors. In primary market, the company receives the investment money. In secondary market, the selling investor receives the money. In primary market, shares are offered through an IPO, FPO, or other new issues. In secondary market, shares can be bought and sold every trading day. In primary market, the issue price is decided before the shares are offered. In secondary prices change continuously based on demand and supply. Here is a simple trick that will help you remember forever. Primary market is equal to first sale equals to company raises money. Secondary market equals resale equals investors trade among themselves. If you remember these two lines, you will never confuse the primary market and the secondary market. Why both market important? Both markets play different but equally important roles. The primary market helps companies raise fund for growth, expansion, innovation, and business development. The secondary market provides liquidity to investors by allowing them to buy or sell shares whenever the market is open. Without the primary market, companies would struggle to raise capital. Without the secondary market, investors would find it difficult to sell their investment and recover their money. Together, these two markets form the foundation of an efficient and well functioning stock market. Let's quick summarize today's lesson. The primary market is where company issues new shares and raise capital from investors. The secondary market is where investors trade existing shares among themselves. In the primary market, the company receives the money. In the secondary market, the selling investor receives the money. Understand these differences in one of the most important basics of stock market investment. I hope today's session helped you clearly understand the difference between the primary market and the secondary market. In our next class, we will continue our stock market learning journey with another important concept that every beginner should know. If you found this video helpful, please like this video, share it with your friends and family, and subscribe to our channel. Don't forget to press the bell icon so you will never miss our upcoming lessons. Thank you for watching. See you in the next class. Happy learning and happy investing.